Hello, my name's Steve Norregaard. I'm the Managing Director of Win Metals, a company that listed on the stock exchange here in Australia in 2021, focused on nickel. The nickel price has obviously, and the sentiment towards nickel has gone backwards. So the company, during the course of last year, has made a pivot and pivoted into gold whilst retaining its exposure to its nickel project sitting dormant now.
Good to meet you, Steve. Thanks for coming on the platform. Tell us, we're going to hear a little bit about you. So, I mean, just before we kind of dive into gold, because obviously gold is the metal of the moment. With regards to the nickel, when you say it's sitting dormant, is there any prospect of you flipping that out, or do you think there will be some future value in nickel?
Oh, I think there will be future value in nickel. The company had a market cap of over $160 million less than 2 years ago. So the value's there. I think it would be fair to say it's latent as we sit here today. Nickel will come back in the future. It's probably more so not a question of if, it's a question of when. So with us, we do have inbound interest on that asset, and we consider all of these opportunities. But for the time being, it's an asset that sits comfortably in our portfolio, and we'll see value come from it eventually.
So what would the market need to look like for that to work? So you're talking some high grades, well over 1% type levels, and you've got a kind of good starter project there. So if you were to flip that out, or if you were to start up again, what does the nickel market need to look like?
We'd probably need to see a nickel price north of 20,000 US for us to start to get excited about it again. The battery sector is probably going to be a bit of a barometer for us, because we think the project is ideally suited to for providing feedstock to go downstream. Low carbon footprint, ESG credentials. Our project, as it's currently configured as a standalone project, has a capacity of delivering 10,000 tonnes of nickel in concentrate per annum. And we believe we have visibility for plus 10 years at those sort of rates. So we think it's a great project to be fitted together with a potential OEM requiring battery feedstock.
Right, and obviously what I think nickel around sort of 15,000 mooted to go back this year to 20,000. It's just that consistency around pricing that I guess the market's looking for, and certainly funders will be looking for. Is that in the back of your mind in terms of where future value may come from and how this thing gets financed?
The market is probably more so looking at how long can Indonesia sustain the high production rate of nickel. And that's effectively put a floor on the nickel price going up. The question on everyone's mind is as to whether that's sustainable for the short term, the medium term, or the long term. We see in the last 2022, I think the head grade was over 1.7% coming out of those laterite operations. Can they sustain that? I don't know. It remains to be seen. All I know is that nickel's a very volatile commodity at the best of times, and we'll probably discover a drop in head grade when that flows through to a drop in stockpiles, which will see nickel become a scarce commodity again and the price go up.
I guess the one thing in the favour is obviously with Trump aboard and the sort of geopolitics at the moment, that perhaps there may be some bifurcation in the market, and obviously Philippines, Indonesia, China. The big drivers of and controls of price at the moment, it is a problem for the US and Europe. We've seen that China is the kind of beneficial owner of like 70% of the production in Indonesia. So it could be problematic in terms of the kind of geopolitics component there, but it could be a signal for you guys that perhaps things might start to sort itself out in the future. So that's why you'd hang on to it?
Yeah, look, there will be demand for our nickel. It's a question of from where. We can continue down a pathway of producing a nickel concentrate, which has historically been the case, or, as I intimated, partner up with an OEM to supply the battery industry, in which case partners in the United States would be our prime target just by virtue of the tariff structure that's been put in place.
Yeah, I think guys, you've been given a kind of free pass by Trump, it seems, certainly on the iron ore, may apply to nickel at some point in the future. Well, okay, well, let's skip over. And actually, we should talk quickly about the lithium project. Is that, again, sort of in the same camp at the moment, given where lithium is?
Yeah, lithium price is very depressed. It's a difficult time
depressing
for everyone.
Yeah.
We know that we've found it very, very quickly and very, very simply. There's more to be found. Just a question of having the economic motivation to do so.
Right. Okay. Understood. Right. Let's get to Bushes Creek. Gold, obviously, de rigueur at the moment. Gold prices never seen before. So what have you got, and what are you going to be doing?
Early in the first half of last year, we decided that we had to pivot to another commodity. Gold at that point in time seemed a good place to be. We've been very, very excited about the Butchers Creek project, which we consummated the transaction on that in late November of last year. We've been on the ground. We've completed a 7,500 metre drill program. Had some great results, both infill and extensional on the two resources that we've got there. It's a substantial resource, some 357,000 ounces of gold. The entry price in terms of acquiring the project was very, very attractive. It's sub $10 an ounce in terms of upfront consideration. All in all, a wonderful, wonderful outcome leading up to Christmas of last year, should I say. We now go through a process where we're going to recalculate the resource base, and we're getting inbound interest in terms of the various options and opportunities we have associated with that project, which we're all duly considering now.
Such as?
Adjacent processing plants looking for potential mill feed. That gives us opportunity to avoid a significant chunk of capex. We see both potential in the primary ore associated with the resources that we've got. Also from an exploration viewpoint, a substantial amount of the gold historically won from the Halls Creek area was won from alluvial fields. The opportunity for us to consider in this high gold price environment, lower cut-off grades, larger economies of scale from an alluvial perspective is something that we want to consider. And indeed, that might open up a big opportunity for us. So part of our ongoing exploration program this year is to look at the alluvial potential of the field.
Well, how do you think market's going to perceive that? I mean, toll milling is kind of like treading water and may raise some money to kind of keep you guys, or keep the lights on, as it were, but it's hardly kind of a growth story in that sense. So what's the purpose of that? Talk about your thoughts about how you kind of grow this company.
There's two schools of thought. Building our cash reserves is something that's always first and foremost on a managing director's horizon. Our ability in the short term to bolster our cash reserves without having to issue capital is something that we would be keenly pursuing. However, the reality is that to build a long-term business, we are also looking in the longer term and saying to ourselves, have we got a standalone project? Which I believe ultimately we will have. We've demonstrated that the resource has the potential to grow well beyond its current levels. We have a lot of head starts, and this project, in comparison to many in Western Australia in particular, has some inherent benefits. We've got a fully constructed tailing storage facility that's got an abundance of capacity. We've got big dams, big sources of fresh water, potable water, which can sustain an ongoing processing facility. We're only 25 kilometres out of Halls Creek, which is a major regional centre. So we see we've got lots of inherent advantages with this project. One of the other key attributes is the mineralization associated with Butchers Creek. It's not what one would consider as being typical narrow vein, high grade gold. This is a big system. It's amenable to a high level of economies of scale and a high level of mechanisation. So very, very cheap mining costs, which is a real positive for the project.
Right. Okay. Look, $10 million market cap company, talking a big game, but you've got to finance this stuff. So when you say you've demonstrated the ability to demonstrate a large system, what precisely have you done, and what will you be able to do if you can raise some money to kind of get after this thing?
The drill program that we carried out before Christmas, we had some phenomenal hits, some very, very large intercepts, which we were very, very happy with. In addition with that, we also looked and asked ourselves, has the system got legs at depth? And we did some extensional drilling. Effectively, we had an existing resource that was about 1,000 metres in plunge length. We stepped out and we confirmed that the mineralisation is continuous some 250 metres outside of the resource. Have we defined it at that depth? No, but we have defined the fact that the mineralised system is continuous. So we can see that what we have now versus what ultimately we have, there's a big disparity there. I'm of the view that the market probably is a bit sceptical of Butcher's Creek. It's a system that was mined back in the mid-1990s and hasn't seen a lot of work since then. So the market needs to wake up to the opportunity that we've acquired.
Right. Okay. And that's your job to kind of communicate that. So, and that's going to be done by what you can show them. Some nice, interesting, great grades coming out of this thing right now. It's really a case of, can you demonstrate that this thing can be mined economically at that point? But before that, you come back to this kind of this tolling start to kind of reduce the kind of dilution component for your shareholders. I have no problem with that whatsoever. But in terms of the way that gold companies are structuring themselves now, it's very different in this market where you sort of see great high gold prices, the ability to produce cash. Can you start with a kind of smaller project off the back of this toll milling and maybe build up to a slightly more larger and more efficient project? Or how do you come out, how do you get after this thing to show the money? Show me the money.
Matthew, history has served us quite well to this end. The operation was closed down in a very, very abrupt fashion, and the open pit was probably only 40% excavated to its full lateral extent. The southernmost end of our open pit, we've got a floor that's flat, 100 metres wide by probably 150 metres worth of strike length, which was curtailed overnight. That for us is a window of opportunity where for a very, very low working capital requirement, we're able to excavate quite a significant amount of ore for virtually negligible consideration. So we can generate a good return without compromising our long-term aspirations, assuming it all comes together, of course. It takes, we don't own the other processing plants, so that conversation remains ongoing. But we don't lose sight of our long-term aspirations.
Right. So, because like I said, traditionally, it's, the explorers like to kind of build these things out and show, 2, 3, I think 5 million ounces seems to be the thing of the moment. But you think that you can start small and build it from there, and that's the way for not just survival, but growth of this company?
The conventional wisdom is that you need 1 million ounces to start a new project. I would probably argue that that's not necessarily the case when you have such high operating margins. You can actually afford to consider a smaller operation, smaller capex, but with a smaller resource base, there's still a compelling investment case to pursue. You don't need to be producing 100,000 ounces per annum to have a viable business case these days.
This is true. This is true. At these prices, the margin profile looks very, very different. So how do we get from where we are today to a point where you can start that process? Is it just talking to the market and hoping you get some increased liquidity and a bit more volume of trading and go and raise some money? Or is there a bit more work to do before that?
Look, the investment in drilling that we made prior to Christmas, we are now quantifying what that means in terms of the resource and resource growth. The pre-existing resource prior to us starting drilling, it still had quite a significant indicated component. So we were aiming to build upon that indicated component. It gives us a good benchmark and a good opportunity to consider the project in terms of a scoping study, which we have effectively commenced now. We've got a resource coming out hopefully in the next month and a half, which will demonstrate that we've seen both growth in terms of the size of the resource and in terms of confidence. We, in concert with that, we've got our plans for further drilling. Whether we need to do more deep drilling at Butcher's Creek remains to be seen. I'm of the view that we can probably defer that and start to look at some of the shallower, lower cost resources that we've got and exploit them.
Okay. What do you say to people who will kind of look at this company and go, well, you seem to be sort of jumping on the bandwagon of lithium, didn't work out, you've nickel, didn't work out, and now on gold, and if there's a reaction to gold? Or do you say, actually, we've maintained optionality for moments just like this? How do you answer that sort of thought process?
Yeah, well, timing is everything, and us, like many other nickel companies, have missed that boat definitely, and we've paid the penalty for that, and we've seen massive erosion in our market caps. Fortunately for Win Metals, we pivoted at the right time. If we were still relying on nickel, well, it would be a different story. So that pivot, whilst still retaining the nickel asset and the lithium asset, puts us in a wonderful position in terms of optionality. If we do see the nickel price recover, the inherent the value that we say is latent now will come to the fore.
Okay.
Wonderful situation.
Okay, and just to finish off, look, I should have asked you at the beginning, but tell us a little bit about yourself. What's the background relevant to what you're doing now, which is obviously trying to build and grow a company?
Look, I'm a mining engineer. I've had a background, been managing director of two ASX-listed companies, chief operating officer for Westgold most recently, worked in Canada, worked in the Philippines. What we're doing here in terms of building a mining house, I've done previously. So no surprises for us going forward. We've got a necessary skill set internally that we can use. And even at board level, we've got a broad range of expertise cutting across processing. I'm a mining engineer. We have geological expertise as well as corporate expertise. So the right recipe for a company that has aspirations of going into production in the short to medium term.
Meaning how long? What would be the goal?
If we could be into production on our gold asset in the next 18 months, I think that would be a wonderful outcome.
In terms of the toll milling type scenario?
Yeah.
Okay. How do you describe yourself? Are you pragmatic, hopeful? What are you?
An eternal optimist. But fleet of foot realise that there's going to be more money made in gold than there is in nickel in the short term. So we've taken our bitter pill, seen the value in the company erode, but we're certainly primed now. A wonderful opportunity with the company at equity value of about $10 million. Given the asset base, you turn around and you say, well, this thing in the right environment and at the right time will go.
Steve, appreciate your time today. Nice to learn about your story. We'll catch up with you soon. Thank you.
Thank you very much, Matt.